So hey guys, I first want to thank you guys for joining the 12-month stock investing challenge. So if you signed up through my link on social media, or even if you're already in the community, I appreciate you joining. So if you don't know the contents of this challenge, pretty much what I'm going to be doing is guiding you over the next 11 months and helping you build a profitable long-term investing portfolio. I feel like personally, in my experience, this is the best way to learn how to invest, and this is the foundation of investing. Now, of course, I do teach options trading, which allows you to create daily income, and I teach a lot of other strategies too. So outside of this challenge is completely free. It's no charge to you. I'm going to be uploading videos like this so that you guys can stay engaged during the 12-month challenge. And also feel free to ask any questions that you may have. What we're going to do is we're going to start off by today, I'm going to show you what stocks I want you guys to pick in your portfolio. Some of you guys took quite a while to set up your portfolio, so I gave you guys pretty much the month of January to set up your accounts, get into place. If you haven't set those things up, make sure that you go ahead and set them up and take action now. Again, this is completely free, and what I've seen in the past of when things are free, but it gives you value, a lot of times people don't take it seriously because they're not paying for it. So there's no transaction involved. So there's no really real effort put into it. So what I challenge you guys to do also is take action on this challenge. Take it seriously because you're going to be able to get a great return on your stock investing portfolio if you follow everything that I tell you to do. So my goal is not only to help you learn how to be a more profitable and consistent investor, but also be able to get results so you can share this information with your family, you can share this with your children, and you can pass it down. So a lot of times we complain about our income and where we are. Of course, we know inflation is crazy right now, and the only way to outpace inflation is to actually invest. So that's another reason why I'm doing this completely free. I know a lot of people have their money tied up in a lot of different things. A lot of people are in debt, but this is the opportunity for you to take action. So what we're going to do is flip over to my screen here. And what we're going to do is I'm going to walk you through how to set up your N1 Finance Pi if you are having issues. Again, I will be guiding you through this over the next 11 months. So you are not alone. You can ask questions in the community. It's completely fine. You can comment under this video. It's completely fine. I want to make sure that I'm giving you all the value and everything that you need. But I can tell you one thing, once you set up this Pi and once you set up this investment account and you set it up to automatically invest a certain amount that you want to invest every month, your investing is going to be on autopilot. You're not going to have to watch this every month like how people think you have to watch the stock market every day or anything. You only have to do that for day trading. If you're not day trading, I set this N1 Finance account and I selected N1 more specifically because it allows you to auto invest. So I actually have had success with this. I created this account and maybe account with N1 Finance in 2020. You can move over your 401k to them. You can do a lot of different things with them, but it's a very great tool. And the cool thing about it is a lot of people ask me, hey, can I start with Fidelity? Can I start with Robinhood? I already have an investment account. No, you cannot. If you want to follow along, that's completely fine, but you have to start another account that's completely at zero. Another thing is some of those accounts don't allow you to invest in fractional shares. N1 Finance allows you to do that. So that's why I'm informing you guys to set up a complete new account with N1 Finance. And you can use the link that's going to be below this video to do it, or the video that's in our Slack channel. And you can go ahead and set up this account and follow along with the challenge. And you can start with any amount. So a lot of people are just like, oh, well, I don't really invest in the stock market because I don't have a lot of money. Well, you don't need a lot of money to invest in the stock market. You just have to start. The biggest variable between you and the next person is when you start and not how much money you invest. A lot of people think that. Now, if you do have more money to invest, yeah, that's great. That's great. Of course, you know, that money's going to grow, it's going to compound. The cool thing about investing in a long-term stock portfolio also is we get dividends. So we get paid for being shareholders and owning stock. So I tell people all the time, don't be a consumer all your life. get into the stock market, start investing, take action, because this is going to allow you to grow your wealth over a period of time. So what we're going to do is, I'm not going to take up too much time here, but what I'm going to do is walk you guys through setting up your M1 Finance pie. So it's called a pie, but it's really just a stock portfolio. And the reason why they call it a pie, you're going to see here shortly. So if we go here, we're going to go to Add Slice. And what we're going to be investing in is pretty much going to be called ETFs and investment funds. So what ETFs and investment funds are is pretty much ETF stands for exchange traded fund, and then index funds follows a particular index. So when I say index, that means that it follows three of the most important things that make up the New York Stock Exchange. So it's three major indexes that make up the New York Stock Exchange, and one of them is Dow Jones, which includes 30 of the oldest publicly traded stocks. So you got Lowe's, you got Home Depot, you got Boeing. If we're thinking about that along those lines. Now, the next bucket where a lot of stocks fall into would be the S&P 500, which you may hear some people call it SPY. That is going to be 500 mid-cap and large-cap companies. So if you're thinking about Tesla, Apple, companies like that, usually they're going to fall into SPY, or they're going to follow SPY. Pretty much most companies fall in SPY, and then, or if they don't fall in the SPY, they fall in the last bucket, which is called NASDAQ. So NASDAQ is pretty much the top technology stocks. So you have technology stocks, and then you have a few more other stocks that's not technology too, but it's primarily technology stocks. So we're thinking about Amazon, the Googles, the Microsoft. Those are going to be things that are going to be that's going to be falling to that NASDAQ index. So we have exchange traded funds that are focused on just specific bunch of stocks. So we can call it a basket of stocks. And the reason why we're investing into ETFs and index funds, because it allows you to diversify your investments. So when I say diversify your investments, that pretty much means that instead of investing into a single stock like here, if we invested in just Microsoft alone and that's it, let's say Microsoft had a 10% drop tomorrow, our whole portfolio would go down. But let's just say we invest into an ETF that has Microsoft, that has 400 other companies, our investment account is not going to be impacted as much. So this is one of the safest way to get started with investing, and it's also the most conservative way. If you are familiar with your 401k is invested in ETFs and index funds. So completely safe measure, and I think it's a great approach instead of just investing in single stocks. There's nothing wrong with investing in single stocks at all once you really learn how to build your stock portfolio and build a foundation. But other than that, starting off with this fund, we're going to kind of take the safe route, invest in index funds and ETFs, so that one, you guys can get a proper return on your investment and you can diversify your portfolio. So let's dive in here. So if we was looking for stocks, we'll stay on the stocks. But since these are index funds and ETFs, and these are under funds, we would search for them. The first one that we're going to search for is XLK. So XLK, it stands for the Technology Select Sector SPDR Fund. This actually follows the S&P 500 index, and it follows and is composed of all of the technology stocks that is in the S&P 500. So some of those stocks include, if we scroll down here, Microsoft, NVIDIA, AMD, Cisco, Apple. So we're getting exposure to a lot of these stocks. It showed you the top holders. 20% of the allocation is pretty much in Microsoft and Apple here. You got 5% allocation in NVIDIA. And you can do this research on your own time also. But some of this, I just wanted to kind of show you guys where you can click around to. Now, what we care about is 1 year and 5 year returns. Why? Because we're long-term investing. We're not trading. So if we look at the 1 year return, 47%. Tell me what bank. Let me know which bank is going to give you a 47% return on your money. Let me know, because I'm not sure. I haven't had a bank. I wish I could find a bank that give me a high yield account like this. But in my experience, I found more fun in investing in brokerage accounts. And then you can kind of see why. So let's transition over to the 5 year growth. 5 year growth, 198%. Picture you got a 198% return on your money. Would you still be in the same situation? Would you still feel like you're underwater? Would you still be bothered by inflation? Would you still be living paycheck to paycheck? So this is why I stress we have to invest in the stock market. And this is why this knowledge is important. This is why financial literacy is important, because everybody doesn't have this knowledge. And it's out here, but putting it together, it takes time. I didn't have it all figured out either. And that's why I share a lot of my information, share a lot of my knowledge, and guide people, just because I didn't have it all figured out once. And I know how it feels to want to get ahead in life, and you keep walking into roadblocks. You keep running into financial situations, and you get sick of it. We're getting older. Our parents are getting sick. Our people are getting sick around us. We need to take more caution when it comes to our finances and take them more seriously. So let's go ahead and dive in. We're going to go ahead and select a couple of more ETFs here. So if we're looking here, we have the SLK. So we're just going to hit add to basket. The next one that we're going to add is VOO. Now this is Vanguard S&P 500. We won't break all of these down, but I'll kind of show you guys what's in the top holdings. So Apple, Amazon, Google, Meta, Tesla, Microsoft. All of these have great returns, of course, 78% in the past 5 years, 20% in the past 1 year. Year to date may be a little low right now because the year just started, so it's like 1%. So the cool thing about it is we're catching it during this little dip too. So that's a plus. What we're going to do is, pretty much, since we're using N1 Finance, is it's going to allow us to dollar cost average into these investments, and that way we don't need this whole $400 to own a piece of this. What it's going to do is it's going to disperse your money over these 5 stocks that we're going to select, and it's going to allow you to invest in them consistently over the next 11 months. So let's just go ahead and knock out that. So we got VOO added. The next one is QQQ. And again, this is strictly educational advice. This is not financial advice. This is just a fun challenge that I feel like you guys will enjoy and get a great return on. So I have to put that disclaimer out there for my financial gurus. Anyway, QQQ follows the top 100 NASDAQ stocks, the cream of the crop when it comes to technology stocks. We're going to add that to basket. Again, some of the familiar stocks that you see here are listed. And then, of course, tech has crazy returns, 147% in the past 5 years, 43% in the past year. So this is a plus. This is something that we want to see. In addition to this, we are going to add XLV. Now, this is healthcare stocks. Now, we know healthcare is big pharma, and healthcare runs America, to be honest. That's where a lot of our dollars go into: medications, medical bills. We know healthcare is going to be there no matter what. One of the strongest stocks during the pandemic that was growing outside of, oddly, Chipotle and Domino's Pizza was healthcare. And big pharma companies, of course, pharmaceutical companies that was working on cure for COVID. So Moderna, Pfizer, some of those companies, they had huge growth during the pandemic just because we were going through that situation. Now, usually these companies have pretty much still stable growth. If we look at the 5-year growth here, which just includes Johnson & Johnson and Pfizer and a couple of other companies, 54% return. And we go look at the 1 year, 6% return here. We go down, we got EY, Lilly, Johnson & Johnson, ABV. We have American Co. We have United Health. these are some great companies. So we're going to go ahead and add that to basket. And then the next, what we're going to go to is VIG. Last but not least, I believe. So VIG stands for Vanguard Dividend Appreciation Fund. And what this does is it follows the top companies that pay out dividends and increase their dividends over the past decade. So these are also called what's called dividend aristocrats. And I cover this in my stock and options mentorship program. It's a 6-week program where I pretty much break down the stock market, show you how to trade stocks, and show you how to invest in the stock market also. So I will have enrollment if you guys are completely new to the stock market needs and you need more hands-on help. I will have enrollment in that 6-week program coming up this month. You guys will be able to take advantage of that. If you guys are following along in this challenge and you are in this particular channel, you will get a discount code so that you can, or a discount, I'm sorry, so that you can actually enroll in that. A lot of people went through that mentorship program, and a lot of people that you see posting in the profits and gains, or maybe not even posting in the group anymore because they're independently trading, they successfully graduated that program. So if you're completely new to the market, want hands-on, it is going to be a cost. It's not free, but it's 6 weeks of my time. So, but it's time well spent. And most people who go through the program, honestly, they actually get their return on investment back within their first 2 trades. So if you do right and you execute, you're going to be good to go. So outside of that, we got Vanguard Dividend Appreciation Fund. Let's look at the growth. 5-year growth, 65%. You're not going to find that at Bank of America. Year to date, not up there yet. It's actually pulling back. So we buying in at some good time. This is why I really didn't start it at the beginning of January, because I feel like January we were going to sell off, and I wanted to catch that little dip before we start taking off going into the new year. So sometimes you can't always time the bottom, and Warren Buffett has a saying, time in the market is better than time in the market, and I definitely agree. So if we're looking here, 1 year, 11% growth, this is pretty good. And again, this shares with you exactly what I just told you. VIG tracks the market cap weight index of U.S. companies that increase their annual dividends for 10 or consecutive years. Told you past decade. So for people who don't know me and watching this video, I know my stuff. And investing is a learning journey. Like, I didn't know all this stuff out of the box. I've been investing since literally 2010. I started Barge Consulting Group in 2020 during the pandemic, grew it to over 3,000 people, literally helped almost maybe 5,000 families inside the community and outside the community with mentorships and learning the stock market. And it's just something that I love to do. I love to share my knowledge. And I came from a unfortunate background where I grew up on Section 8, food stamps, things like that. So those things systematically made me want more. When I went to college, I became an accounting major, learned about money, learned about finance, and that kind of it kind of grew me to where I am today. Professionally, I worked in healthcare IT, so I've always been in IT and I've kind of been a tech guy for a while. However, just started doing this to help people out, and honestly, during the pandemic, I was able to quit my job, go full-time entrepreneur, just off trading stocks, and it's been great, So the biggest thing is just really just taking action and believing in yourself. That's one of the biggest things. You're gonna hear a lot of people judge you when you're on this journey of financial independence, financial growth, and you're building wealth. Even if you're not doing stocks, maybe you're doing real estate, maybe you're doing something else. You're going to get a lot of criticism from people that's not doing shit, to be honest. So you want to just make sure that you're focused on your goals and you're executing, and you're going to be able to kill them. But other than that, we're going to go ahead and add this to the basket. And then once we add this to the basket, we got all the stocks that we need. So once we hit this, we're going to hit add, and this is going to add this to our pie. So now, as you guys see, I created my pie. It's called 12-month stock investing challenge. And from here, we're going to adjust our exposure here. So this target percentage, this is the percentage of your money that gets allocated into each stock. So right here by default is 20%. We're going to go ahead and change this. So we're actually going to change the XLK to 25%. We're going to change VU to 25%. We're going to change QQQ to 25%. We're going to change the healthcare XLV select sector. That is going to be 10%. We don't want to go too heavy in there. And then dividend appreciation, that's going to be 15%. So right now, we pretty much have everything balanced across the board. It should say 100, 100. Once you do that, you can just go ahead and hit continue and save and confirm any changes. And then from there, you have everything that you need. Now, the next thing that you need to do is connect your bank. And then from there, once you make a deposit, and you can start off with any amount. So whether it's $100, $50, I suggest going back on the back end of the account with that bank connection or wherever you set up your financial institution, and go ahead and set up your automated investments. If you guys need a video on that, let me know. I can share that too. However, setting up your automated investments is going to allow you to go ahead and set it on autopilot. So what I mean by that is, let's just say we add our bank and then we're going to do a deposit of $100, and then we go ahead and set up rules in the background so that it automatically drafts $50 every time we get paid every 2 weeks. That's how you're going to automate this account. And the cool thing about it is, that's why I said anybody can start with any amount. It doesn't matter. And you're going to be able to take action and be a part of this challenge. So if you guys have any questions, I hope this video was helpful. Again, this is completely free. This is something that I'm spending my time on. So if you guys don't mind, just take action. And what we're going to do is we're going to meet every month. We're going to I'm either going to share videos like this, or we're going to get on a live call. We're going to talk about some of you guys' results. We're going to talk about some other stocks that we may shift and get into if I see fit. But other than that, once you set this up, you can set it and forget it. And then you can casually look at it, every week, week to week. But you should be able to automate your investing. And from here, you're going to be building good wealth habits. So on top of your emergency fund that you may already have with your bank account, this is going to be your second emergency fund that's going to actually really be growing your wealth. And then on top of that, you get paid dividends while we're holding this stock. So I don't know why people don't invest, because you get so many incentives. You get tax advantages. You get, on top of that, you get the opportunity to get paid dividends for being a shareholder. And then on top of that, once you sell a stock, that's a taxable event. So that's even more incentive for you to hold that stock and grow. Warren Buffett said most people who ever bought stock, if they never sold them, they'll be more wealthier. So just think about that. Another thing that I wanted to show you guys very quickly is, this is why I really kind of been stressing investing. So let's just say, let's go to the video. And I'm share this very quickly. So NVIDIA's growth over the past 5 years. If you would have invested in NVIDIA in 2019, and I'll just share this, I don't like doing if or woulda, shoulda, coulda, but if you would have invested at $38 in 2019, NVIDIA grew to where it is today, $630 per share. Look at this percentage, 1,600%. Crazy. You would have got 1,600% return on your money, 1,600% return on your investment. This is how wealth is built, guys. And it's built over time, brick by brick. And it starts with consistency. Now, of course, it took 5 years, but some people be like, 5 years takes too long. Think about how much money you done messed up in the past 5 years, or how much money you done blown on unnecessary crap. We're in a generation where people rather look like money than actually have money. So I want you guys to be able to take action. I want you guys to actually have money. I want you guys to live a life of abundance. I want you guys to actually build wealth. So this is the journey that we're going on for the next 11 months. Now, the last thing that we want to look at here is the 1 year return. So if you would have started investing from January 1st of last year at $195, you would have got a 221% return. Insane, insane. And this is just one from one single stock. Now, there's the other stocks that move like this too, like Meta, which owns Facebook and Instagram. It went crazy. Amazon went crazy. Google went crazy. But this is just an incentive to let you go, physically see how much money that you guys missed out in the past 5 years. How much money that you missed out on the past 1 year from not taking action. So what I want you guys to do is go ahead and take action. If you haven't set up your account, go ahead and set up your account. Use the link below of this video to grab your N1 account. Go ahead and set that up, fund it, and then go ahead and join this challenge. See you guys all in the next video.